Hello traders, welcome back to FS Page. In this video, I will show you the secret to mastering advanced Japanese candlestick patterns. Stay with me until the end to unlock key tips. If you've already covered the basics, this video will take you to the next level, from 3 line strikes to island reversal and even a powerful trading example. You will learn how to spot, confirm, and execute profitable trades. Next, I will reveal a pattern most traders overlook. Don't miss it. What are advanced candlestick patterns? Advanced candlestick patterns go beyond the basics of price highs and lows. These patterns give you deeper insight into market psychology and can act as powerful signal for upcoming price action. When paired with technical indicators, these patterns give traders an edge. Let's dive in. Pattern 1. Free line strike. The free line strike is a continuation pattern consisting of 3 consecutive candles in one direction, followed by a large candle in the opposite direction. Bullish example: 3 green candles followed by a red candle that closes above the first green candle. Bearish example: 3 red candles followed by a green candle that closes below the first red candle. Pro tip: combine this with volume analysis. If the 4th candle forms with higher volume, it confirms the pattern's strength. Pattern 2. Evening star and morning star. The morning star and evening star are powerful 3 candle reversal patterns. Morning star appear after a downtrend. First candle bearish, second indecisive like a doji, and third bullish. Evening star appears after an uptrend. First candle bullish, second a doji, and third bearish. Pro tip: always wait for the 3rd candle to close and check if it aligns with support or resistance levels. Coming up next, we will uncover a rare candlestick patterns most traders miss. Stick around. Pattern 3. 3 white soldiers and 3 black crows. These patterns show strong momentum. 3 white soldiers, 3 long bullish candles, each closing higher than the last, signal robust upward momentum. 3 black crows, 3 bearish candles in a row, signal strong selling pressure. Pro tip: avoid trading these patterns in overbought or oversold condition. Confirm market sentiment using RSI. Pattern 4. Tweezers. Tweezer patterns form when 2 candles have identical highs or lows. Tweezer top indicates resistance and potential reversal in an uptrend. Tweezer bottom signal support and potential reversal in a downtrend. Pro tip: use Fibonacci retracement levels to identify precise entry points for these patterns. Next, I will show you how to use one of these patterns in a live trading scenario. Don't go anywhere. Pattern 5. Piercing line and dark cloud cover. These 2 candle reversal patterns offer excellent trade setup. Piercing line: a bullish reversal where a green candle closes above the midpoint of the previous red candle. Dark cloud cover: a bearish reversal where a red candle closes below the midpoint of the previous green candle. Pro tip: use volume and moving averages to validate these patterns. Pattern 6. Gap and windows. Rising and falling windows or price gaps. Rising and falling windows or price gap signal strong momentum. Rising window, a gap up that often acts as support. Falling windows, a gap down that often acts as resistance. Pro tip, watch for a candle closing within the gap. It often signals a reversal. Pattern 7, Island Reversal. The island reversal is a rare yet powerful pattern where a gap down is followed by consolidation and a gap up or vice versa. Pro tip, high trading volume during these gaps strengthens the signal. Next, we will discuss how to combine these patterns with indicators for maximum reliability. Don't miss it. Advanced trading example. Let's apply this pattern in a real-world example. Here is a chart showing a free line strike. Notice how the first three candles indicate a strong uptrend. The fourth candle, supported by high volume, closes below the first candle. Combining this with an RSI confirms a strong bullish signal. This is why pairing candlesticks pattern with other indicators can enhance your confidence in making trades. Entering this trade at the high of the bearish candle and placing a stop loss below the low of the bearish candle would have been a perfect entry. I would have yielded this in profit. So this is how you trade three line strike. Combining patterns with indicators. For higher accuracy, combine candlesticks patterns with RSI to confirm overbought or oversold conditions. Bollinger Bands to spot volatility and breakout potential. Volume analysis to validate the strength of a pattern. Common mistakes to avoid. Avoid these common pitfalls. 1. Ignoring the bigger market context. 2. Trading patterns without proper confirmation. 3. Overtrading and chasing patterns. And here you have it, traders, the ultimate guide to advanced Japanese candlestick patterns. These patterns, paired with indicator and proper strategy, can take your trading to the next level. Which candlestick pattern do you use most often? Let me know below. If you found this video helpful, hit the like button, share it with fellow traders, and subscribe to this channel for more expert trading tips. Stay tuned for the next video where I will review even more advanced trading strategies.